I hope you know you're lucky to have me here explaining what happened today and how you could have made money, because what I'm about to show you is probably the most institutional price action I've seen in a long time. Okay, let's get started. Remember yesterday I posted a video saying I can tell the future, right? And that was talking about this right here, this trade, or this potential trade. Okay, remember how I said, and I even showed you my model, how we were waiting for a down move, market structure shift, then a reprice to the OT. If there's a fair value gap there, you draw it off the fair value gap, and then you draw your standard deviation. And so that standard deviation from this market structure shift ends up being a very large standard deviation. Okay, very, very large. Now, what I don't like to do is I don't like to swing trade, especially these positions like these, okay? Because these positions and these trades take a long time to happen, okay? Now, what happens? We have a reaction in the discount, so we get bought up. And this is yesterday, by the way, not today. We go up, take out this liquidity, and this is at 355, and then we enter aftermarket. Okay, so all of this is London, all this is Asian, my bad, then London, and then New York AM. Okay, but then what happens? We come down, price comes down, trades down. Notice that we're now in the discount, and we're also past this OT zone. We hit this 100%. It was 15. It was this 15-minute order block that I marked out there. Hit that 15-minute order block there. Get a reaction off of it. 3 a.m. Create some, pretty sure London lows, London highs. Typical London lows are down here. Okay. 6 a.m. Boom. New York session opens. We trade down to this London low. We trade into this 15-minute order block again. We're trading into it. We're not closing kind of into it. Trade above. Boom, boom, boom. And then we get our high here, which, as you can see here, we have this kind of nice forming downtrend, if you will. I'm actually going to put this here, like maybe here. Okay, very nice forming downtrend, and all of a sudden, we got to close above all these highs, and we got to close above here. So that tells me, that if price closes above here, it's a market structure shift. Okay, so I can already make my self-aware that this is a market structure shift, possibly if price closes above. We trade down. We hit that 15-minute order block at 920. We open 925. We have a bullish move up, and then 930 we open. And then this is where we see that institutional order flow, right? We go up. Now, I'm not trading this. Remember, I'm not trading this whole thing right here. What I am trading and what I was waiting for, and what you could have seen today, is that, again, this high, right, broke it. So market structure shift, valid. Now, what do I look for? Okay, and this is the tricky part. Now you look for a swing high. Okay. Now, the first thing you want to do is when you're in this situation right here that I was in, the swing low is determined. It's this swing low. Okay. How do I mark it? Is there a circle? Circle. Okay, so this is the swing low up here. Whoa. What the fuck? Okay, that's the swing low down here. The current swing high that I had marked out was this up here. Would you agree? So my OT at first was this. It was from this low to that high, and we'll do the OT, and then we'll drag it out. Okay, that was the OT. But then look what happens. Off this high, oh my god. Turn this off. Off this high of the OT, price comes down, hits the discount area. So now people can start buying. And I do want to notice, and please do note, that today we had 10 a.m. news. Let's see what ISM is. ISM, if actual is greater than the forecast, that means it's good for currency. Was this greater for the forecast? Yes, it was by 3. No, what am I saying? By 5. But what the fuck am I saying? I don't know math. What am I saying? Yeah, by 5. Jesus. By 0.5, basically. So not a lot, but it is a slippage. And that means that it's good for currency, which means it's bad for the SPX. But then you have Jolt's job opening. Let's see what it says. Actual greater than forecast is good for currency. So for this to be bearish news, we would need this number to be a little higher than 9.3, which it was lower. So it was bad for currency. So you had bearish news and bullish news. That contradicts. That is what I like to call kill price action, right? It kills each other. So one's bearish, one's bullish. It just goes over the top. They kind of take out each other, right? So then you see the spike up, but then you see the spike down, and then you see the spike up, and then you see the spike down. So all that happened in the discount area, okay? But I want you to notice this spike down created another high up here. So then the real question is, where's the real OTE? Shouldn't the OT be up here? Whoops. Because that's the new swing high. Yeah. In fact, you can draw 2 to be sure. Right? You can have this high and then drag it out again. Boom. So now you have 2 OTs overlapping. I know it's a lot, but at least you get an idea of where from this swing high to this swing high, the zone down here is. So if you're staying on the 5 minute, which I don't recommend doing, and that's not what the strategy teaches, I'm probably gonna have to update that because it doesn't tell you. But you want to zoom out a little bit. So I'm on the 5 minute marking this. What if I go to the 15 minute? Is there anything I can notice? Now again, I'm looking for fair value gaps in this golden area. On the golden area or in this golden area, or if I don't find anything here, I look broader, right? In maybe the other bigger areas. 15 minute, do we notice anything in this area? No. There's an order block down here, but that's not even near the OT, and that's too low for us to want to take a trade. So let's go higher. Is there a 30 minute something? Oh, yeah, there is. Did you catch your eye on that though? Or is there too much? Let me hide this for a second. Do you notice anything? Right here. See, from this high to this low, see how small that gap is? But it's there. That's a gap. That's a fair value gap, which I marked in blue. Actually, we'll mark it in orange. Okay? That's going to be important. Now, the OT that you want to have is the bigger one. Whatever the bigger OT is, right, is what you want to have. So I'm going to delete this small one down here. But no, the price action on that one is also very important. So this is where it gets institutional. And Keegan, if you're watching this, you know you'll like this is you'll understand why I like trading like this so much better than anything else. Because like I said, we just marked out that 30-minute fair value gap off this swing low to this swing highs OT level. In that OT level, we have found this 30-minute fair value gap, which corresponds to price action in our OT levels. When we're marked out, we switch back to the 5-minute, which is where we would take our entry most of the time. And we notice that price at first comes down into the first area, into the first quadrant, but doesn't quite reach our likable entry point. So it comes back up, no trade taken, and then it dumps back down at around 11:45. And then this time it goes past the golden zone, but not quite to that fair value gap. But it is interested. It's almost there. Almost. And then it goes back up. Notice how price doesn't fully close above these highs. Doesn't even trade up to these highs. And then it kind of starts selling back down. Look at this, actually. Look at this little pattern. Look at these highs. Looks like a pyramid. Looks like a house. Isn't that sick? Wicking. Lots of wicking. Lots of selling, especially here. Sells, bought, and then sell, 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 sell. Now, watch what this does. It comes all the way down past these lows. Okay, so understand that we are past these lows now. Took out those lows, which is a form of sell-side liquidity. Internal. This is internal sell-side. We'll even mark it just for you. Internal sell-side. Okay. Watch what it does at the 30-minute fair value gap. On the 5-minute, it looks precise. What about the 3-minute? Looks precise. What about the 1-minute? I'm curious what the 1-minute looks like. Wow. What do you call that? To the dot. To the dot. One tick, then a buyback, and then a sell back. And usually, and I mean, if you've seen price action, usually when you get a big move like this and then a pullback and then another move down, this move down is more aggressive and will pull all the way down to these levels. Ticked. Didn't get past that. What's the low on this? The low is 45.58. What's the low on this? 45.58. And let's get on the 30-minute. What's the high of that candle on the 30-minute? If we can find it. Jeez. What's the high on this candle? 45.58. Well. If that doesn't tell me something, I don't know what does. And then, if you want even better confirmation, because I already know I'm taking a trade off this, you can redo your OT from this swing low to that swing high, right? And just to see if it's still in the zone, okay? Because this swing high, right, that OT is now down here. So in a way, you're like, price could still want to come down here. But does it? No, it doesn't, because this OT is not valid anymore, right? Because this high got taken out by this one, this is now the valid one. And notice how price closed above 1, 2, 3 times now. It closed above after taking into that 30-minute fair value gap, while taking out internal sell-side liquidity. So now, if you were to take a trade, you would take the standard deviation of the swing low that created all this, the swing low to the market structure shift. So that's what I did. So let's do that again. The swing low, the most recent swing low, so not this swing low, right? We're talking about this swing low that created this big move that, drew the OTE. So from this swing low to the market structure shift, standard deviation. And the standard deviation tells us that the -1 to -1.5 level is here. So that's your first target. What's the current liquidity there? Well, I'm already seeing something. Look at it this way. Okay, so there's liquidity up here to be targeting. That's your first level. Okay, notice where price goes. Now, this price here is not relevant because this is actually not where we're taking the trade. We're taking the trade down here. Okay, so this level has already been traded through, right? Note that. But you can still draw this out and notice how this respects it. That's that. So obviously, if you're taking a trade here, your first target is these little highs up here, but it's not very good risk to reward. Your first target should be just the draw, which is this high. And this is actually so close to the -2 and 2.5 that you might as well just target consequent encroachment of this. And I'll tell you right now, if you were in a trade, you'd be pissed. but this is gonna hit tonight. It's getting so close that it will hit. It will get there. Now the confirmation on the trade itself, right? Let's see. I would have looked at maybe the 3 minute, and here my entry point would have not been the fair value gap. The fair value gap is to see what price action is doing. And if I'm seeing this price action here, and then I'm seeing that break of structure, my entry will always be on the 0.705 going zone. Okay. Now my stop loss is now going to be tight on this because of this price action here that was created off this 30-minute fair value gap. Also, knowing that it took out this internal sell-side liquidity, I'm hoping that this is a valid, liquidity sweep, and that this does break to the upside. What I'm now waiting for, and what would be nice, is another market structure shift. Okay, just to see the confirmation. So on the 3 minute, even on the 5 minute, where's that market structure shift happening? It's right here. We're waiting for this high to be broken. Okay. Oh, not SMT. Market structure shift. That's what we get. Okay. Your target, first of all, would be this high at first. And then if you really wanted to, up here on the consequent encroachment. Okay. That would be the trade. And notice, I'm pretty sure you can still get on this trade. If you took the swing low of this to the swing high, and did an OT here, drag that. Okay, this comes down, comes up a little more, comes down a little more, final swing. Okay, maybe not actually. But you could have, I know some traders do reaccumulation. So like this is market structure shift, comes back down, and then you had all this discount where you potentially could have taken a trade. There also, I guess it doesn't come down to the OT levels, or else would be in drawdown at that point. That is true. That'd be bad. So it looks like, as you can see, I just want to note, like your take profits would have been here. That's one. And if you had another contract to be there, and then your runner, right? Your runner would be like this end position. So like, I know it's scattered out, but this to this is good. And then that little runner can go on forever, or unless you want to end it there, or you can end it early, right? I mean, I would recommend ending it here, because that's a trade, right? That's that high. If you want to go against or go with standard deviation, go for it, by all means, right? Which is what I did. So it didn't hit yet, but it's going to. That I can tell the future on that, right? Let's just talk about what happened yesterday. Just delete these because we don't need these. And look at this. The standard deviation of this trade. Look at the negative 0.4. Where's it nearby? The external buy side. If that isn't also more confirmation of institutional orders, I don't know what is. This trade right here, this little trade that we're about to take, the standard deviation of this trade, where it's most likely to go, the top of the top is this external buy side. So might as well fuck it. Target that one. See how that plays out. Right? Before we jump into that though, I just want to talk about yesterday, right? I was hoping to take this on a swing trade, but when I noticed that this broke kind of the zones, and I noticed that there was nothing here to be a PD array, when I looked lower, this isn't what I teach. This isn't the model I teach, and this isn't the model I learned. So you know what I did? I said, you know what? I'm not trading this. I can't trade it. So if I can't trade it, delete everything, move on to the next thing, right? So that standard deviation is off. This is still on. This is off. And this is off. And that is off. right? The only thing I'll keep that, whatever, just for research purposes. The only thing that's going to stay right now is that for notes, right? So, yeah, I hope you learned something, and let me know if you have any questions in the comment below. See ya.